reports like this are super important for all of us because we need data to see where we're going and how we're growing. Next up, we have a panel discussion, Banking on Fintech. I'm super excited about this because, as most of you know, this is a largely unbanked population in Pakistan. Only 20 to 40 million, depending on which banker you're talking to, are a part of our banking system. And to moderate this panel, we're going to be having the only chief financial inclusion officer that exists in a banking system in Pakistan. We only have one, and that man is Abrar Mir, and he works with HPL. He is responsible for delivering the digital data and inclusion agenda of the bank. So HPL actually has an inclusion agenda. They want to bring in that whole unbanked population into the banking system. And he's going to be joined by, do you want to come on stage, Abrar? Join me. I'm feeling a little lonely here. Thank you. Abrar, would you like to have a seat? And then he's going to be joined by Owais Zaidi from Credit Fix. Round of applause for Owais. Louder. Bring that energy from the food that you had earlier. Yahya Khan from Bank Al Falah, Pakistan. Naureen Hyat from Tez Financial Services. Thank you. Okay. Halima Iqbal from Iran. And Javaid Iqbal, who's a technology consultant. Sorry, we don't have Bank Al Falah on the stage because they do not have an inclusion officer, probably. Over to you, Abrar.
Well, good afternoon, everyone. It's very exciting to be here, but at the same time, I'm feeling very nervous here because, as you can see, I'm the only one representing the banks here, and everybody else is coming from more of a fintech space. If we go back about 4 or 5 years, there was a lot of hype in the world where everybody was talking about that the fintechs are going to come, they are going to disaggregate the banking industry, and they're going to eat the whole banking industry away. But fast forward now to the present time, as I was in the US this whole of last week, and then I was talking to a large Chinese fintech guy last evening in Dubai as well, and what I see is that increasingly the realization has come and that maturity level has come where people are increasingly recognizing the fact that it's not about fintechs coming and trying to take over the banking space. It is about collaborating, it is about partnering, it is about fintechs being that enabler of creating new products, new values, a new user experience that the banks may be slow at getting to, or the banks may not be very good at getting to. And it's more now in the spirit of partnerships that we hear both the fintechs and the financial sector talk about. So with that background, what we intend to do today is, since I am the only one representing a bank here, I think it would be unfair if I'm the only one asking questions. So what we have agreed as a panel today is that I will also be a panelist in the sense that my colleagues here are going to ask us questions. We are going to try and make it more conversational than a monologue that you typically see in a moderated panel. So we will just start off by where I will request all my colleagues here to introduce themselves, and from there on, it will be more of a free-flow conversation, and we hope that we will be able to come up with some interesting points that we can summarize at the end of the day. What I would also like to encourage the audience is that after the first 5 or 10 minutes, please feel free to raise your hands if you have any questions or comments that you want to be addressed so that we can make it a more engaging, more non-conventional, more conversational panel than a typical panel. So with that, I pass it on to Owais, and then I request all of you to introduce yourself. Tell us a little bit about what you do, what your thoughts are about the banks and the fintechs partnerships, and how your experiences have been so far in terms of engaging with the banks.
All right, so I'm Owais Zaidi. I represent a fintech startup called CreditFix, and we are focused on providing loans digitally to small businesses ranging from $200 up to $20,000. So we started off as a platform that wanted to just be an enabler and bring all the banks and licensed lenders on board. And then we play the role of customer acquisition and risk processing. Initially, it was very tough. It was, 2.5 years ago, it was a difficult sell to banks. So we pivoted, and we decided to start our own lending. And then we ended up becoming a digital lending platform. It's been a tough journey, but we respect what the concerns of the banks are, simply for the fact that it's a very regulated space. They're dealing with public money, and they have a responsibility towards their customers who deposit money, as well as towards the regulators. So it was a tough journey, but we have seen the ice break. I think you saw the announcement of HBL. There are other banks trying to be open about it too. So in the past 6-8 months, we've seen a huge shift. I think banks are realizing that they need to partner for the future. And I think fintechs are waking up to the reality that they can't be banks. The moment they become a bank, they will be subject to the same regulatory regime that a bank suffers today. So all well and good. There have been good experiences. There have been horrible experiences too. I'll share a very interesting story, which some of my fellow panelists may at some point experience if they haven't already, is that we were very close to inking a major deal with a bank, and then it says, hey, all the contract is negotiated. Before we sign up, show us under the hood. And we said, well, everything is agreed, just the contracts are ready, fine. We opened up in extreme detail. And suddenly, if some of you young enough to realize what ghosting is, when your girlfriend or boyfriend does that, that's what we found. And it was a great, amazing experience. Couldn't get a hold of him. We moved on. So because we couldn't get a response to an email or call across the hierarchy. One day, I was on a very packed flight to a city. And lo and behold, the gentleman in charge was stuck on the seat right next to me. So it was a very uncomfortable moment for him. I had a big smile on my face. And let's say it was, security wasn't called, so it was all very pleasant. But this shows, so we have banks who have signed up and they're migrating the entire lending platform on lending business onto a platform from where banks have done this to us. So they're, like any other industry, they're all kind of players. So, but, the summary is that so far so good.
Thank you.
So my company is called Tez, and Tez is technically Pakistan's first fully digital, really, in all essence, the first fully digital financial institution. And our vision is really to be a full stack digital financial institution. And when I say full stack, we are providing credit, savings, insurance, and investments, an entire slate of financial services to the and the underbanked via our smartphone application. So a smartphone is technically a Tez branch. What we're doing is we're banking on smartphone data, and we are analyzing them through AI and assigning people credit scores. As most of us know, our smartphones are on us most of the time, and they know about us more than anyone does. So Tez is really banking on the digital railroad that has already been set. Cheers to the branches banking providers, even the digital penetration, the 3G, 4G coverage. Pakistan has done lots. It's actually jumped leaps and bounds in the digital space, at least. But the financial space, as we know it, still has a long way to go. Our experience with banks so far has been a bit of a mixed experience. There are banks, who are thinking on the lines of collaborations. Some of them we've been collaborating with. Some of them have been positive experiences, most on the telco-led banks. Maybe they're a little more savvier when it comes to technology and adoption, even customer journey-wise. But then there are commercial banks, which, and as Owais rightly said, they're probably shackled by the regulations also, which is why the compliance and the IS requirements curtails them from going into a space that otherwise could have been much easier if those regulations were a little more, I'd say a little more rationalized. Well, my experience really has been that it's not only about collaborating technically. There is need for a focus on a paradigm shift in mindsets. And when banks say, we become completely digital, number one, I don't know what completely digital really means from a bank's perspective, because I'm yet to see one, unfortunately. The other thing is, what we've seen as one of the major challenges has been that around data. I think everyone is very, very possessive about data. And I'm using the word possessive, not protective, because I think they feel that this is going to be the key to them being able to use and create more products. But that's not the case. Data, the only thing that will actually differentiate these players would be how that data is actually analyzed and executed in the favor of the customer. So I think that's one of the major issues that we've faced so far with the banks so far. And on the tech side, the legacy systems really haven't allowed them to integrate seamlessly with fintechs. You need an entire paradigm shift in the customer journeys as well. If we are to say that a bank wants to bring in a particular product because it's the in word these days, for example, nano finance has become a very, very hot topic these days, and we see a lot of banks wanting to get into this space. It's not only about bringing a product on your digital app. You need a cultural shift in understanding the customer needs. You need an entire change in customer journeys. And until and unless that doesn't happen, I don't see collaborations working successfully. So I think collaborations, as you said, is the key, but successful collaborations need a lot more to go into it.
Thank you.
Hi, my name is Halima. I'm the CEO and founder of Uran. Uran started with a very specific problem. Why is your savings to GDP so low when there has been a lot of work that's being done around financial inclusion? We went on to do our own research and found that 41% of the population does committees. So we are a platform that's digitizing committees to bring the informal sector into the formal sector. Fintech means a lot of things to a lot of different people, and what really it is in this day and age is the pace at which technology is changing financial services. And being in Pakistan, where financial inclusion is at 14% in 2019, the way forward needs to be collaboration, not just between banks, but also with regulators and startups, to come out and understand what are the customer needs that we're solving for, what are the insights that we're getting from the very, very fragmented customer personas, and work together to align ourselves on principles and keep a colonial mindset and divide and conquer. One company is not going to be able to solve for financial exclusion. We make up 5% of the entire world's unbanked population. That's massive. So we need to come together, align on principles, allow partnerships, allow integrations to happen with banking systems. Let people do. If SME needs to get credit, Owais is there. If there is nano credit requirements, TASE is already doing it. If you need savings products, Uran is doing it. So it's about coming together, aligning on principles, and letting fintech take at a pace that we need to catch up or be leaders in this space.
Well, thank you. So far it's been very kind to all of us. So I suspect Javaid is not going to be that kind. And there are going to be fireworks. So over to you, Javaid.
Well, nice to have that repetition as well, Abrar, on this one. Assalamu alaikum, everybody. Javaid Iqbal. I run a transformation consultancy called Transform X, where we help organizations with their next generation of customers. Now, what does that really mean? If you look at the generations we are in right now, everybody is so obsessed with millennials. And if you think about it, Pakistan has, out of the 220, 135 million of them. or so they speak in that terms as well. But what we're not factoring in is the next generation, which is the generation Alpha. The generation that's born between 2010 and 2025, that's the first generation that will be born into AI. And even these kids, as they're learning, the toys they're going to be playing with as well, are going to have some sort of intelligence built into them. Now, work your way backwards and see every bank, every fintech, what are we doing as a people to get ready for that? As we start helping banks with their journeys, one of the first questions I ask them is, what does digital mean to you? And I think at least the leadership's been through enough conferences in the last couple of years to at least have some frame of reference as to that it's more than Facebook or just social media. But I think what they don't realize is that fintechs are coming in every shape or size. Naureen, you said you're a financial institution. So you want to take a bite out of that bank sandwich. How much of that bite it is right now? How much of that bite becomes once state bank and the regulatory bodies allow you to do that as well? Because technically there are four sides to this equation. You've got the incumbents, which are your banks. You've got your disruptors, which are all your fintechs. There's a regulator that is also learning from everybody else as well. Typically, regulators are behind. And the ultimate consumer is the customer. Now, the problem on that customer side itself, we talked about journeys in this case as well, not all customers are savvy enough yet. I go to banks, I don't like going to branches, sorry Abrar Sahab, I want everything done to me over the phone, and that doesn't typically happen. But I'm realizing that the banks in Pakistan, most of them, the branches, except for the premier one, are built for riders and runners, not customers. And they act on you and they serve you in that very way. If I have 5 products with that bank and I walk in, I expect them to greet me as, good evening, Mr. Iqbal, good afternoon. What can I help you with? How can I sell you your 6th product? These folks have the native customer understanding to be able to do so. While every bank struggles with the famous terms KYC, AML, at the same time, at the time when no big bank has a up and functional enterprise grade CRM as a base layer, I think the conversation is not there. And while the strides have been made by State Bank as well to help educate the technological side of allowing or actually mandating one technical savvy person on the board, I believe the change needs to come from the top. Board members need to understand what is about to hit them, how much of that sandwich will be taken away. I understand the collaborative aspect, but I think we'll be living in a fool's paradise to think that they will live in harmony with the banks. They'll bite and bite and bite. So I think it needs to have an oh shit moment by the banks where they need to wake up and say, what is going to happen in the next 5 years when alphas start to ask this question? They know AI. They're used to journeys being built for them. You don't have that answer for you right now.
Thank you. I think the couple of things that people have raised here. The first thing I think I would be first one to go out and say and acknowledge that we try and hide behind the regulator. I think that's unfair to the regulator to a large extent. The regulator in Pakistan that we are fortunate enough to have a regulator who is progressive, who is very supportive, who is always actually now complaining to the industry that industry is not moving fast enough. So I think that's not really an excuse that we can have anymore. What we do have is obviously, I think, one is that proverbial head in the sand kind of a thing. And the second thing is, I think everybody is so comfortable in terms of the profits being made and everything else that there is no urge to make that happen. But that's where I'm fortunate enough to be a part of organization where everybody recognizes that it's not only about making money, it's also about our responsibility towards the ecosystem. It's about our responsibility to ensure and enable that the whole ecosystem moves forward. And we are an enabling part of that journey, and we're not somebody who is trying to prevent that progress to happen. And that's where I've been fortunate enough to be a part of organization. But I think, like you're rightly saying, we need to have more banks starting to think on those lines.
Absolutely.
Because to me, it's at this point, I think when you're looking at a country like Pakistan with hardly 10 or 15 or 20% financially included communities, it's naive for either the banks to think about it or even the fintechs to think about it that somebody will take away somebody's share or somebody is going to disrupt somebody's business model. I think there is so much out there to be had that we can all work together. We can all, and it's important that we all recognize the fact that we all have to work together to add value to the end customer, to make a difference to their life, to bring something that is compelling enough for them to start engaging with the financial system. Today, they're not interested in engaging with the financial system because as financial system, we take very few plain vanilla products to them. Those products are not necessarily aligned to their lifestyle. They're not aligned to their needs in life. And that's where we all need to learn, and that's where fintechs can come in and help. That because the banks on their own, obviously, we have limited number of people and limited number of minds. There's only so much creativity that we will have. So that's where I think this whole ecosystem of fintechs can help bring in a lot of that creativity, a lot of that energy, a lot of different ways of looking at customers, their needs, the different solutions or value propositions that need to be taken to the customer. And that's where the partnership opportunities exist. So personally speaking, I don't think so that this is the time where we need to be worried about losing market share to somebody. This is the time where we need to be excited about the potentials, the opportunity out there, the potential to create new things, the opportunity to create new things, and to be able to do that together. And obviously, each one of them are out here as a commercial venture, so everyone has to make money. And that's where I think the banks are also now going to start to gradually realize that the future business model is more going to be about revenue sharing through value proposition,
Absolutely.
through creating value. It's not going to be about taking a few patented services that we've had forever and just being able to monetize those, because those services are becoming commoditized. So the future of a digital world is only going to be about value addition, creating value for the customer, user experience, and the value proposition that we take out there.
So,
I want to add something to that. So I think the fundamental shift that I see that is required from the bank side is, to a large extent, what you just said as well, the experiences and so forth. But most banks are very product-centric. If you change your strategy from being very product-centric to customer-centric, you start realizing where these people are chipping away from you. And, a lot of times, including people into your decision-making process, which comes from getting the right data. And because your systems are so archaic and not connected to your strategy, you're not getting that data to be able to bring the customer centricity on there as well. So it's a double whammy that you guys are exploring across the board. At least, if I put banks into three cadres, one that get it, one that might get it, one that will never get it.
but let the sleeping giants sleep, right? Let's not wake them, right?
That's why you'll wake up and take their lunch.
Yeah. But, we have to be very honest about a few things about the fintech sector, right? It's very nascent. It's not a typical startup sector that anybody fresh out of college can actually go and execute at scale, right? Because there is a presupposition that you come with a certain domain knowledge. A lot of people can see the problems, I'm sure, without the background, but But to devise a solution, even as a startup, you have to operate in a very regulated space. And the possessiveness that I think Naureen talked about, I think I'll second her on that, but it's not just about the data, it's about everything, right? I own the customer. No, you don't own the customer. The customer has a bank account with you, and he doesn't care whether you live or die as long as the money is available, right? So you don't own anything. So that's where I think the possessiveness is very wide. But you know, I was starting and I was talking about that fintech sector is just starting to show that it's coming of age, right? It's not, doesn't have that much depth yet. I think we're building up to that. There are a lot of good companies, great companies coming up, lending side, payment side, saving side, insurance side. So we just started to see that happen. And because it's a specialized sector, so initially a lot of investment was there for e-commerce and ride sharing and more like larger problem sets. There are not many local specialized investors available for this particular domain. So all these challenge the requirement of domain knowledge, the requirement, the lack of capital, you know, up till recently, all this contributed that this sector took its time coming of age. But, you know, definitely, like you're seeing a lot of starts of stage, there are many out there in the audience. So it's starting to happen. And one of the signs of maturity is what Abrar is saying, that nobody really owns the entire customer, and there is space for collaboration, right? Banks have huge balance sheets. Startup like us required that balance sheet. I mean, the quantum of what's available on the platter is so huge. I'll just talk about micro enterprise. There are about 3.2 million micro enterprises in Pakistan, small, really small businesses. Out of them, less than 200,000 are served. So imagine, and you take ₹1 million as the average lending requirement, let's say, you multiply that by 3 million, and you'll get an astronomical number that no startup, no matter how much funding without deposit can take. So we can go so far on our own, and there will be a definite requirement of leveraging balance sheets. What we are doing right now and going through is proving to these conservative bankers that, hey, the risk assessment at scale works. Once that is done, once they have seen a portfolio performance for about 12 to 18 months or 24 months, I think they will want, because they need to deploy capital at scale. And today, no bank is geared up to do risk assessment at scale now. So I think it's just the market forces are driving this behavior of everybody opening up, and you know, some people will be sensible quicker and some will take a longer time to follow the herd. But I think it's writing on the wall. Nobody can own the entire space. I cannot be a super bank, at least as far as CreditFix is concerned. We talk about, you know, depth instead of breadth. So we want to be really specialized, really good at risk at scale business, and you know, and that will be our strategy. And for any kind of growth, I mean, it certainly, the moment you start multiplying, it's billions of dollars. It's not hundreds of millions of dollars. It's billions of dollars that you require, and nobody can single-handedly do that in Pakistan.
Yeah, you know, to that point, and I think most of us, at least the bankers, know their numbers. And you know, Abrar, you mentioned that, you know, a lot of the bankers have now become comfortable with the profits that they're earning. 90% of the revenues that banks earn are from the investments in PIBs and T-bills. Only about 6 to 7% actually come from the consumers. Unfortunately, as you mentioned, you know, the mindsets of the board, you know, most of them at least have to really change to bring in that change in their comfort zones. And you know, when you talk about bringing in these new products, it's not just bringing in the product. Like you said, you know, they're really customer-oriented approaches. It's not about just bringing in a product, oh, because, you know, this is something that you think a fintech is selling and this is something that's going to, you know, prosper. It's probably not even going to add to the bottom line of a bank in terms of the risk-reward scenario. So, you know, for example, and I'm going to maybe pose a proposal to you right now. You know, for example, Tez, we have loans of 1,000 rupees to 10,000 rupees. And, you know, we have our own credit scoring. It's going pretty well. We have a couple of banks and a couple of telcos who are looking at, we've actually partnered with. And in essence, it's now a platform play, as we were talking about earlier, where we have an integration layer, and banks can now integrate with us, and, you know, we can then actually collaborate together on the nano side at least. which is in essence something that we are geared to do. For a bank, as mammoth size at HBL, or even most of the banks whose perspectives really aren't to cater to this particular niche, why go for a market, that's not your niche? And let us do that. And maybe then we can graduate a customer to you for larger loan cycles. So will you be willing to partner with us on that?
That was not part of the script.
Putting him on the spot there.
And here I was saying that everybody is being kind to me. Little did I know what was coming my way. So yeah, no, I think what you're saying, Naureen, is absolutely right. I was in Vegas last week, and trust me, I was working. There was a conference.
I believe you.
And a couple of people that I met, and one thing that was very interesting that I heard people say over there, that they were looking at traditional banks like us, and they were starting to go out and say, guys, you need to recognize that the alternative data is no more alternative. It's the data and it's the model that you guys are still sticking to it using. That is probably now should be considered as alternative form, not what we do.
Right.
So I think that's a realization at our end that needs to happen. I can tell you one thing, that at least as a bank, we have an in-principle approval to go ahead and start doing something like that. We have some capital available that we can use to go out and experiment in this space. We haven't figured out the vehicle or the route that we will take to get there, but I'm happy to go out and explore that further with you.
Well, then again, collaborations would be important here. So if you're actually going into maybe setting up a new NBFC that doesn't come under the domain of the state bank, but the SECP, which is a much more lenient regulator, touch wood, it's actually then, maybe in essence, the spirit of collaboration should exist, which I still feel is shaky.
Yeah, like I said, I cannot disagree with you at this point in time, that are we all ready and geared up? Well, absolutely not, because we need to convince our internal stakeholders as well. But I think I can certainly say it with a lot of confidence that when you look at least our organization, we are the only ones to put out there API platform without any compulsion, either from the regulator or from the market. It's a voluntary thing because we believe that we have to work. We have voluntarily gone out and we've started to induct startups into our mobile apps. Now, you must recognize that for a large bank, that's a huge step forward because now we are exposing millions of our customers to a startup in the hope that if the volumes come the way of the startup will be geared to be able to scale up. And if they don't scale up, it's equally our reputation at stake with the customers. But we're still willing to go ahead and do that because we believe, one, it is our responsibility to be a player to enable. And second, we genuinely believe that we cannot go out and do everything for the customer. We have to go out and partner with people like yourself because from a customer user experience perspective, from new product creation perspective, I wish we could do it all on our own. If we could do it, we would have done it by now. So that's obviously not the case. So that recognition is there. I think we have taken initial steps. How quickly will we get to that stage that you're talking about? Will it be next month? Will it be 6 months? I'm not sure. But I can certainly promise you it will not be 12 months from now. It will be way faster than that.
So I have a question, Abrar Sahab, on that one. So,
and here I thought I was the moderator. I'm suddenly the one. I should have stuck to the standard of me getting to ask the questions.
Well, you opened it up and she's already sold a product to you in the meantime. So I think I can ask a question. So when you say you have to also sell it internally to your stakeholders as well, that means even at HBL, as innovative as you are, as ecosystem friendly, technology ecosystem friendly that you guys have consistently been, you still have people inside that need to understand this yet. What is it in the leadership ranks, and I'm not talking about HBL only, you for us right now representing the entire Pakistan banking community, what do you think they don't get? And what do you think, if they get, will happen within the partnership ranks and taking it forward?
I don't think it's about they don't get or they don't get it. I think it's more a case of you don't know what you don't know.
Okay.
So
risk awareness?
No, it's like if you don't even know that what's happening out there or what could happen in future, or if you don't really know what is it that you can do or what is your potential and all of that, I think you continue to be very comfortable in what you have been doing.
True.
Because you know your processes are in place, your risk structures are in place, you know if something goes wrong, who to point your finger at and blame somebody. If this thing broke down, that's the person who's responsible for. But when you get into more digital structure and you get into partnerships with third parties and startups and whatever else, first of all, there's some degree of control that you're letting go. Letting go of control generates a huge amount of fear, huge amount of skepticism in people's mind. It's not that easy to let go of that sense of control. It's not like, you know, in our conventional structure, we actually have a control, but we like to believe we have that sense that we have control. So giving up that control, giving up that sense of control is not that easy. And that will not happen unless, you know, you've got somebody crazy like myself who is going out and constantly talking about doing it in the hope that somebody will eventually listen to you. But you have to have those champions in the organizations. Right. You have to have that willingness to let those champions be. You have to have that willingness to not give them a shut-up call. You may not want to entertain them a lot, but at least let them be and see where they can get to, and if they're able to convert few other people in the organizations. I think that's where a bigger challenge with the banks remains. And what that also then does is, in the absence of any particular champion within the organizations, we do not have a clear framework for engagement with the startups or with the fintechs. So as an organization today, for example, if you were to try and figure out in XYZ bank that you as a fintech need to reach out to somebody, you wouldn't know that is there a centralized person? Is it a decentralized structure? Is it a hybrid structure? Is this bank looking at being a platform bank? Is it looking at being a banking as a service structure? Is it looking at being a API enablement structure? What is it that the bank is looking to do? Who do I go and talk to? I think that in itself is another huge challenge that the banks will need to gradually graduate towards, but that will only happen once the banks start to recognize and realize that it's not about doing what you are doing. It's about evolution. It's about recognizing that your customer is completely changing. The expectation of your customer is changing. And unless you stay relevant to your customer, you will not survive. It's not about a fintech eating your business. It's about you not staying relevant to the customer. Yes. So your customers' behavior are changing. Their needs are behaving. Their experiences and expectations are being shaped by global platforms. Right. If you are not able to respond to that changing needs, you will become extinct. Right. So that's what I think is more worrying part, and that's where we need to think a lot more about. Right.
You know, I have an interesting thought when I was sitting here that I don't know how many sectors it happens to, but if you look at three fintechs sitting on the stage, Uran, Tez, CreditFix, they're all three led by females. You know, I am clear about my gender, but my boss is sitting over there. Aisha, please wave. So I think that alone deserves a big round of applause. So I think it's great because, you know, it's a very difficult industry, fintech, especially because of regulation. And just to see so much women leading companies in there, I think it's a very heartening thing because in general, without beating down my own gender, I think they're more empathetic towards the customers. So I'm very optimistic about good outcomes for the end customers coming from that. My question towards, you know, since we are all equal here, so towards, I think, you know, Halima. So since you have moved back from abroad, so how has your experience been? Are you finding the market receptive? And how's your experience different from operating in a Western market, more developed market, to a more developing market?
I think one of the biggest challenges that startups face, or any bank face in Pakistan, and which directly relates to the financial inclusion rate, is financial literacy, which unfortunately nobody talks about. We are, across socioeconomic classes, our financial literacy is ridiculously low. So no matter what product you build, how beautiful it looks, however great the customer journey is, if the customer doesn't understand the need of it in their personal lives, the adoption is going to be very, very low. So while we have this responsibility of building more customer-centric products, we also need to make sure that the literacy, the part is also solved for. And once that is solved for, the financial inclusion also automatically increases. So as banks, as startups, as fintech companies, that is something that we need to be mindful of. And that was one of the largest differences that I saw from the Western world coming into here. The relationship with money we have is there's a taboo around it. Even if I have 100 rupees, I have no platform right now to go in and say, I want to invest it or I want to save it. And if you don't have that comfort and platforms available, the capital control or growth doesn't happen. And large part of the ecosystem then starts falling apart. So that is something that we need to be mindful of. Start having those conversations that it's okay to even start somewhere, however little or however large it is. Start now.
But thank you very much. I think we're running out of time. So thank you everyone for being part of this engaging conversation. And I must certainly thank you guys for being very kind to me. This is one of the very few panels where people have not bashed the banks so hardly. So thank you very much. And I look forward that as we move forward, hopefully next year when this conference is happening, we will be sitting here and talking about some meaningful actual outcomes of collaborations. And we'll be talking about more case studies than still talking about being in a position where we're trying to struggle to figure out how to work with each other. So thank you, everyone.
Thank you.
Thank you very much.
Thank you, Abrar.
Thank you. While they're taking a picture, just a few words from me. How's everyone doing?